please subscribe and don't forget to press the bell icon to get notified whenever we upload a new video.
Taking a cue from what happened on Wall Street, we have the Kospi that's trading with a gain of close to around 0.2% the last time I checked. Remember, the Japanese market is enjoying the holiday, so lucky them, but the remainder of the Asian markets, they're trading with a positive bias. So we have the Kospi that's holding the green, the Straits as well did open up with good gains, and the Taiwanese index now sitting with the gain of close to around 0.5%. We have been seeing very, very volatile trading sessions, but for starters at least, it's indicating that we're likely to start with a gain of close to around 10 to maybe around 15 points.
Okay, well, let's tell you what's happening on Wall Street. US stocks surged to record highs on the first day of 2018. The Nasdaq advanced 1.5% to end above 7,000 for the first time ever. S&P 500 gained 0.8%, notching intraday and closing record highs. CNBC's Deirdre Bosa gets us a wrap of all what took place on Wall Street.
Looking at the broader markets, remember this was the first trading day of 2018, and that first trading day looked a lot like last year, a pretty steady upward march for the markets. Also much like last year, technology stocks led the way with behemoths like Apple, Amazon, Facebook, Google, all pushing the Nasdaq to a new record high and above that 7,000 mark for the very first time. The S&P 500 also finishing at a record high, helped by retail and healthcare stocks. Now, there was no obvious catalyst, but I want to talk a little bit about some of the seasonal effects. Technically, usually the first day in January can be a good indicator for the rest of the month, but in terms of the January barometer for the rest of the year, historically, how the markets have traded in January has been a good omen for the rest of the year. But in recent years, that January barometer has been more of a coin flip. So just something to keep in mind. Looking at the year ahead, though, there's the bull and bear case. The bull case includes the U.S. tax overhaul that could boost corporate profits, that's earnings, and could boost the economy. The bear case, though, points out risks like stretch valuations and rising interest rates. Meanwhile, though, dollar dropping to a more than 3-month low, extending its underperformance in 2017. Analysts say that investors are skeptical about the Fed's outlook for more rate hikes amid a tepid inflation picture. Back over to you.
Okay, that's what took place in the U.S. markets, but expect 3% growth for the markets in 2018. That's the word coming in from David Kelly of JP Morgan. He also says it's reasonable to expect the stock market to have a correction after 2017's record run.
It's reasonable to expect a correction. The average correction in any given year is about 14%, and we've been very far from that in the last few years. But I think it'll get more interesting as the year goes on. I think we start with a lot of momentum. I think about 3% growth. I think we'll do 3% growth for the year. Productivity, that really is the key, because we're out of workers, and we think this will push the unemployment rate down to its lowest level since 1969, 3.4% by the end of the year. But if we get there, that's really as low as it's going to go. So growth will have to taper down to about 2% next year. We can get 3% growth, but it is a one-hit wonder. 1 year of 3% and 2s for as far as the eye can see after that. And the whole question is, how does the market adjust to that, to the reality of slowing growth in the United States from 2019 on?
Well, a relative underperformance came in from the European markets. All the three frontliners, in fact, ended with some cuts in trade yesterday. As investors there, they continue to monitor the geopolitical unrest in Iran. So that's something that was playing on the minds of traders in the European markets, and that's why, in fact, the three frontliners ended in the red. Well, in terms of economic data, the UK manufacturing data showed a bit of a slowdown for the month of December. It came in at around 56.3 for the month of December. That compares with the reading of around 58.2 in the month of November. So a bit of contraction is what we saw in terms of the UK manufacturing data. But besides the three frontliners, things look good. The ATEX, for example, that in fact was the big gainer in trade yesterday. It ended with a gain of close to around 2%. The Portuguese index as well did quite well, ended with a gain of close to around 1.5%. And keep an eye out, the Brazilian index, it's had a good start to the year. That one, in fact, was up more than 1.5%, close to around 2% in trade yesterday. But on to some geopolitical developments then. The United States has warned North Korea against missile tests. In fact, the U.S. ambassador to United Nations, Nikki Haley, said that the U.S. would not take the planned talks between North as well as South Korea seriously if Pyongyang did not take steps to give up its nuclear weapons. CNBC's Cherry Kang reports on the same.
First, U.S. President Donald Trump tweeting, perhaps that's good news, perhaps not. We'll see. He likes to say that a lot. We'll see. And so sort of playing it down here. And we also got U.S. State Department saying that they're very much skeptical of Kim Jong-un's sincerity of proposing to talk here. And U.S. Ambassador to the United Nations, Nikki Haley, saying North Korea can talk with anyone it would like, but the prerequisite of having to go nuclear free stands still. Here is Ambassador Haley.
We won't take any of the talk seriously if they don't do something to ban all nuclear weapons in North Korea. We consider this to be a very reckless regime. We don't think we need a Band-Aid, and we don't think we need to smile and take a picture. We think that we need to have them stop nuclear weapons, and they need to stop it now. So North Korea can talk with anyone they want, but the U.S. is not going to recognize it or acknowledge it until they agree to ban the nuclear weapons that they have.
And this prerequisite that Washington still insists on of having to go nuclear free on North Korea is a very factor that the likes of Eurasia Group, for example, saying that that could actually spark yet another round of tensions with North Korea, because North Korea is not going to give that up. And also Ambassador Haley added that she's hearing reports of North Korea prepping for yet another missile test, something that we need to be mindful of. And she also had a strong message of deterrence, saying, don't do it. We will come out with tougher measures if you go ahead with another one.
Okay, well, still some tough talk from the US with regards to North Korea. But moving on to asset classes, other asset classes besides equities. In the currency space, the dollar is near 3-month lows, weighed down by expectations of a slower pace of interest rate increases by the Fed Reserve amid a tepid US inflation picture. Meanwhile, the euro has risen to nearly 4-month highs, and the yen is, that is the Japanese yen, has strengthened against the US dollar.
Well, and in the world of commodities, then oil prices, they retreat following the completion of repairs on pipelines in the United Kingdom as well as Libya. That explains why, in fact, Brent crude prices has shaved off close to around $0.50 to around $1 from the high point of yesterday. Well, back home on the Lal Street, the Nifty as well as the Sensex, they traded in a tight range yesterday. They ended more or less as flat as can be. Remember, the market, they failed to hold on to the opening gains that we saw. The Nifty ending a tad bit below the 10,450 odd mark. The mid caps as well, they underperformed, with the index breaching that 21,000 on the downside, while the Nifty Bank eked out at least some gains of around 0.1%. Remember, in yesterday's trading sessions, the volumes, they picked up a tad bit, the cash market volumes. So interesting to see whether or not everyone comes back to their desk from today's trading session onwards. But Naveen's with us. He's going to give us the entire market setup. Hi, Naveen. Good morning.
Good morning, Nigel. I'll begin with yesterday's trade. Clearly, as you pointed out, the benchmark indices, they ended flattish, with the biggest cut seen in the mid-caps. They were down close to 0.7%. But if you see the overall flows, yeah, I take that fact that the cash market volumes had increased relatively, but the overall volumes, including the F&O, was more or less lackluster. Also, in terms of the institutional activity, both FIIs as well as DIIs were buyers in the cash market, as FIIs buying to the tune of close to 520 crore. But if you see on the other hand, they sold close to 1,450 crores in the futures market. So that is something which we will be keenly watching out for. Also, something like a futures premium that had come down from the 60-64 levels close to 30 points. The premium has come down. So that also makes brings in a bit of vulnerability for the markets. In terms of the global clues, Europe ended down more than 3/10 to 4/10%, the likes of DAX as well as CAC. On the other hand, Dow Jones was a bit of a positive, with ending up close to 0.4%. SGX Nifty also indicates more or less an opening in the green, but more or less it will be flattish. In terms of the levels, I would keenly watch out for support near the 10,350 mark. Remember, the 20-day moving average, that also is around the 10,340 mark. So that is one level which will be a strong support for the Nifty. On the other hand, resistance in case of an upside will be seen around the 10,525 mark. So keep an eye on those two levels in terms of the support as well as the resistance. Back to you.
Okay, and Naveen, stocks?
Well, a whole host of stocks will be in focus in today's trade, Ekta. I'll begin with Titan. So Titan, as you know, their tradition, they have come out with a preview for their quarterly update. So over there, the company has suggested that they will have grown close to in double digits in their retail jewelry segment. Also the watches as well as the eyewear segment have given a decent growth. So expect that stock to be more or less in the green. On the other hand, JSW Steel, Goldman Sachs has initiated a coverage on that counter with a buy rating. They believe that the deleveraging as well as the strong margins, that comes in as a positive, and the target price over here is around 315. The big buy RIL, they have come out with their biggest expansion in the petrochemical space. Close to 1.5 million tons per annum is the total capacity. Remember, RIL owns the channel that you are watching currently. On the other hand, Dixon Technologies also has commenced the manufacturing of CCTVs as well as DVRs from their new brand, that is CP+. Apar Industries, stock that we don't talk much, but that has entered into a JV with PPS. This JV will primarily form due to cater to the central as well as the state government. Yash Papers, also one stock in the paper segment which has been buzzing. The company has commenced the production of tableware unit. This is the company's clear positioning in terms of their expansion going ahead. Back to you.
All right, Naveen, thanks so much for that. Well, let's shift focus away from the markets for a bit. A day after the simmering tensions in Maharashtra erupted in an all-out war in the state, Dalit groups, now they have called for a bandh across the state today. The violence led to destruction of property, spreading to multiple cities as well as towns. The opposition is gunning for the BJP, claiming that Dalits are now taking revenge against the party. Now, in the aftermath of those violent clashes, a complaint has been filed against Gujarat MLA Jignesh Mevani for allegedly making provocative statements in Pune. We here at CNBC TV-18 will keep getting you the latest developments as and when we hear from the concerned authorities.
Well, the Rajya Sabha has passed the amendments to the bankruptcy law. The bill replaces an ordinance which bars willful defaulters from bidding for their own companies once the insolvency process kickstarts. However, the bill allows defaulting promoters to be a part of the debt resolution process, provided they repay dues in a month to make their loan account operational. Finance Minister Arun Jaitley defended the bill in the Rajya Sabha. He said that if the same set of people who led to the failure of companies come back to management, nothing would change except the creditors taking the haircut.
The purpose of my intervention is to point out that the ordinance and the bill that replaces the ordinance throws up some more anomalies, and I'm pretty sure that sooner than later the government would have to come back to the House to remove those anomalies. Somewhere in the course of drafting, the amending bill has not become over-inclusive and may in fact become counterproductive to the objective going through the insolvency resolution process.
Here is a management of a company. The company has gone into insolvency. Once the bidding starts, the same promoters come back and want to bid again to get the company. Nothing would change. Those who ran the company down to the ground and insolvency would be back in management after paying 40, 50, 60% or 70% of the amount. Nothing would change except that the creditors have taken a haircut.
Well, the big question is the economy turning a corner? Now, finally, we are seeing some green shoots. The manufacturing activity has hit its highest levels we've seen in the past 5 years, and commercial vehicle sales, which is a proxy for growth, remember, surged by nearly around 60 to around 80% for the month of December. Lata is here with more details. Lata, these numbers, they're certainly encouraging, isn't it?
Data coming in January is definitely encouraging. The PMI, or the Purchasing Managers Index, has come in at a 5-year high. I mean, 54.7. 2 years back, we did get 154 number, but as a rule, the PMI has been between 50 and 52 for India. So clearly, the December number is refreshingly high. And then we got the commercial vehicle sales numbers. You know, passenger vehicle sales number don't tell you so much about the economy, but commercial vehicle sales definitely are seen as a proxy of the economy. And three separate companies are giving us the same message. I mean, if you looked at the numbers from first, say, Tata Motors, of course, year on year, it is showing a huge growth of over 60%. But if you looked back at several months in the past, never have they managed to manufacture 40,500 vehicles in a month. Likewise for Ashok Leyland. I've gone back several months in the past 24 months and even more. Never have they done as many as 19,500 vehicles in a single month. Even if you take an average of the last 24 months, 19,000 looks like, a good 25% higher than the average. Likewise, even for Bajaj Auto, more than their two-wheelers, their three-wheeler sales were a stunner. And then let's go to the core sector numbers, which we got. That again at 6.8%, even after removing the base effect of demonetization, shows some very strong numbers, especially for items like steel and cement, which clearly are a proxy for the economy. I'm not trying to give a picture that all is well with the economy. I mean, our exports are still perhaps a number which we should worry about. But all I'm saying is that even without the base effect, there are some numbers which are indicating that growth is picking up and picking up rather well.